What if I told you the average car payment is now almost as expensive as a mortgage? No, really. Americans are shelling out over $745 a month for new cars and around $521 for used ones. Some even cough up $900 or more every single month just to drive a vehicle that's losing value by the day. Sounds insane, right? But this isn't just a car problem. It's a mindset problem, one that quietly drains your future wealth, erodes your savings, and locks you into a paycheck-to-paycheck life. In this video, we're going to break down how oversized car payments sabotage your finances and how to flip the script to build quiet wealth instead. So buckle up. The truth hits harder than a 7-year loan at 12% interest. The normalization of debt. Let's talk about what's normal now. People take on a $900 per month car payment like it's nothing. I've got friends doing just that. One's driving a new truck, another a flashy Kia SUV. Same income as me. Some even have kids. And I can't help but wonder, how are they making this work? The truth is, they're not. Not really. They're financing today's comfort at the cost of tomorrow's freedom. Because when you lock yourself into massive monthly payments, you eliminate your most powerful financial weapon, flexibility. And when life throws a curveball, and it will, you're already stretched thin. So what happens next? You swipe the credit card for that emergency. You take out a personal loan for the vacation you deserve. The HVAC breaks, and now your home equity line gets maxed out. It's not just a car anymore. It's a gateway to a lifestyle you can't afford and a mindset that keeps you trapped. The payment trap. Here's the dangerous shift. People have stopped asking, "Can I afford this?" and started asking, "Can I afford the payment?" And that mindset? That's the trap. Because if you live your life based on whether you can squeeze one more bill into your monthly budget, you're not building wealth. You're just managing debt. This is how people who make decent money still end up broke. Not because they don't earn enough, but because they've chained themselves to fixed costs that leave no room for saving, investing, or even thinking long-term. Every purchase is filtered through the lens of the now. Can I swing the payment? Instead of, what does this cost me over the next 5 years? And when that becomes your default way of thinking, wealth becomes nearly impossible. The marketing mirage. Let's get something straight. Affordability has been hijacked. When someone says, "I can afford it," what they usually mean is, "I won't overdraft if I pay it monthly." Not that they have the cash. Not that they've factored in interest. Just that it fits barely into their existing financial strain. And who's to blame? Marketing departments, lenders, dealerships. Everyone benefits from you believing that affordability equals loan approval. You qualify so you can afford it. That logic is how people with six-figure incomes still live paycheck to paycheck. The real cost of anything isn't the payment, it's the opportunity cost. It's what that $900 a month could have done in an index fund, in a Roth IRA, or as down payment on a duplex that cash flows forever. The long-term damage. Let's say you finance a car at $850 a month for 72 months. That's 6 years of handing over mortgage-level money for something that depreciates the minute you drive it off the lot. Meanwhile, what are you not doing? You're not building an emergency fund. You're not investing consistently. You're not stacking quiet wealth. That's the danger of stretching your budget to look rich today. You rob your future to fund a lifestyle you can't sustain. And worst of all, you start to think this is normal. Spoiler alert, it's not. But what if it's a smart move? Now, to be fair, not every high car payment is reckless. Some people take on a bigger monthly cost intentionally. Shorter loan terms, low interest rates, faster payoff. That's different. But let's look at the data. The average car loan term is now 66 months, and 6 to 7 year terms are becoming the norm. So statistically, most people aren't being strategic. They're just stretching the loan as far as possible to make the payment affordable, and still ending up with a sky-high monthly bill. It's not just the payment that's bloated, it's the vehicle itself. People are buying way above their means, thinking, Well, the bank approved me, as if the bank cares about their financial goals. Spoiler, it doesn't. The dealer's game. Car dealerships know exactly what they're doing. They work with lenders who'll finance you into a $45,000 SUV with zero down and sky-high interest. Because every dollar you borrow, they profit. Every extra month on your loan, more interest for them. Their concern isn't your wealth, it's their bottom line. You walk in asking, "What can I get approved for?" and walk out owning a financial burden you'll carry for the next 7 years. And by the time it's paid off, it's worth a fraction of what you paid. You thought you were buying freedom, but you really bought a bill. The lifestyle illusion. Never compare your lifestyle to someone else's unless you're also comparing their credit card statements. Real talk. You see the new luxury car, the vacations, the designer bags, but you don't see the debt, the stress, the 84-month loan, the second mortgage, the buy now pay later accounts stacking up like dominoes. Real wealth doesn't always look rich, and what looks rich often isn't. Quiet wealth builds in silence, in the background, through small, boring, consistent habits. Saving, investing, living below your means, avoiding lifestyle creep. Those are the millionaire habits no one's flexing online, but they work. Breaking it down, the true cost. Let's break it down. If you're spending $1,000 per month on your vehicle and only driving about 1 hour per day, which is average, that means you're paying over $30 per hour to drive. And that's not even counting gas, insurance, or maintenance. Now imagine redirecting that money into index funds, a high-yield savings account, or even starting a small business. You could turn that same $1,000 into an engine of wealth instead of a depreciating asset. That's the power of shifting from spending to investing, from payments to freedom. How to win the wealth game. So how do you break free? Buy cars in cash when you can, or stay well below what the bank approves. If you finance, keep the loan term short and interest low. Always think total cost, not just monthly payment. Track your net worth, not your car's value. Invest the difference. If you're saving $400 per month on a modest car, put that into ETFs or retirement funds. Every dollar you don't spend on liabilities is a dollar you can put toward assets. And assets are what make you wealthy. The truth is, the people who look rich often aren't. And the people who build real wealth? They drive used cars, skip the flashy upgrades, and let compounding do the work. You don't have to impress anyone. You just have to be free. Free from payments. Free from stress. Free from the trap of financing a lifestyle for likes. Build the kind of wealth no one sees coming. Quiet wealth. Real security. Financial independence on your terms. If this video gave you something to think about, do one thing today your future self will thank you for. Like this video, subscribe for more real finance content, and drop a comment. What's the one car-related decision you regret or avoided just in time? We're building smarter habits, ditching debt, and designing freedom, one smart money move at a time. See you in the next one.